So in the U.S., mortgage payments are fixed for 30 years, which has been great for homeowners. But now there's hidden costs that are starting to leak into the equation. Buyers are focusing on rates, but there is a lot of other costs that are killing home ownership.
Yeah, this has gone up. I mean, the most obvious way to look at this is through the HOAs.
Mm-hmm.
Right? Like HOAs are getting crushed. I don't know if you guys own in HOAs right now. You're probably not very happy, right? You've got your letters, a lot of you, and I'm not even talking about deferred maintenance.
Right.
That's a different issue. Do you need a roof? Do you need a parking lot? That's not what I'm talking about. What I'm talking about are the basics, the utilities, the insurance costs, the landscaping, all the things that, an HOA might need. That's crushing people. Like, you have a couple stories, right?
Yeah. I mean, a lot of my clients have had assessments, $10,000 assessments. I had one client that had two years in a row. So that's $20,000. That's a lot of money. And the way that assessments work is, they go basically on a payment plan against a lien on your property. So, I had one that was $1,000 at one of mine. That was one of my homes. But at the end of the day, these costs are going up. And it's one of the reasons I'm selling my last condo is because my HOA is now $350 a month. And honestly, for Arizona, $350 a month is normal. It's actually a little cheap. I'd say average is $400. It's an expensive cost on top of mortgage.
Well, your one client, it was $800.
Yeah, my one client was $800.
I mean, guys, you just wrap your head around that. By the way, that's not including property tax.
And this is not a luxury building.
All right. Those $350,000 for this house or the condo, was it?
Yeah, for the 800 one. Yeah.
Okay. All right. Let's just wrap your head around this. $350,000 for a place to live, $800 HOA, property tax on top of that, insurance on top of that, right? So, really you're well over $1,000 a month plus your mortgage payment for a 1-bedroom condo.
Yeah, that was 1 bedroom. Well, I will tell you the average for a 2-bedroom right now in Phoenix is $400. So
insane.
And it's a big deal too, because you have a lot of retirees that, I paid off my condo so I can live here, or a lot of snowbirds, like we have the second home paid off. And then these $400 a month costs come in. That's a lot of money for people to have to come out of pocket.
So Danille was so upset that she decided to sell her condo because it has HOA on it. Right?
Yeah. I mean, in Phoenix, it's hard to find properties that don't have an HOA, but at least on the home HOAs, they're like $100 a month. They go up a few dollars a year. It's really not a big deal. And you get a pool. But these condo buildings with the landscaping and the insurance, and we're going to get into that, but insurance is a big piece of why the HOAs are going up. The landscapers, the maintenance, like all the labor is expensive. The materials to fix things are expensive. I was talking about on our live on Monday is I had an air conditioning unit go out in one of my condos, $15,000 to fix.
For a 1,200 square foot condo.
For a 1,200 square foot condo. So imagine, what the HOA is paying for on a mass scale for roofs and concrete work and parking lots. Yep. Like, it's a lot of money.
And I don't want to just make this about HOA because we're really talking about is the cost of ownership. Mm-hmm. But it does show up in HOAs. And I think many of you can agree that, HOA, it's Homeowners Association, it's common area expenses, just like you would have if you have a single family home, let's say out of an HOA. But the costs are going up a lot. I mean, I'm getting whacked with property tax. I'm getting whacked with insurance. And, talk about insurance. Holy moly. Those two alone, utilities are up. And then it costs to do any kind of work like Danille just mentioned. That $15,000 for her air conditioning is over and above the HOA.
Right.
That's a really important thing to understand. So our handyman, who I love, we started not long ago. He's at $40 an hour. What is he now?
He's $60, but he's still really cheap because average here is like $90.
Yeah. So that you want to be a handyman, you're bouncing right. It's like silver. You're bouncing around $100 an hour. Listen, if you own a few hundred units but can't seem to break through to thousands, I know exactly what holds you back. It's not that you can't find deals. It's not that you're not working hard enough. The problem is you're still trying to do everything yourself. And that approach that got you to a few hundred units, it's exactly the same thing that's keeping you stuck right where you are. So here's what nobody tells you. Scaling to thousands of units isn't about working harder. It's about building the right team and structure and systems. So I manage about 10,000 units and 300 people just in about 3 hours per week. And I want to show you exactly how it works. I'm opening up my boardroom for one day and to just 19 investors. You'll get my complete playbook, the org charts, the systems, how I raise capital, how I structure my team, everything. Plus, you get a 30-minute private call with me after I review your application. That call alone is going to be worth more than the investment. Click the link to apply below.
Well, but here's the thing is the HOA, the reason we wanted to start with that is that's the umbrella that is encompassing all of this, right? The HOA, as much as I knock HOAs and they're bad with their money, and they don't even get me started, but they do have real increased costs. So then if we move away from the HOA and we go straight to the homeowner, then we can talk about insurance. And insurance right now is a huge increase. You hear about it in Florida, you hear about it in California. What you don't hear about is how much Texas the insurance rates have went up. But even in Arizona, like where we don't even have many weather issues, everything's just getting more expensive.
Yeah, I will tell you, insurance companies obviously have gotten smarter, just as you guys would if you owned one. Where are your losses, right? And so as a company, we have properties in Nevada, Texas, all over Texas. Texas is right now under a freeze and a storm and snow, et cetera. I watch the news and I'm like, oh my gosh, okay, what new claims are we going to have come out from this winter storm in Texas? And so as you start to look at where to buy, and we did this on our investment committee last week, where we're focusing on areas that don't really have the ups and downs of claims. They don't have big insurance issues. And what are those? Those are hail. We had hail knock out 60% of my windows on one project in Oklahoma City, as an example, and it penetrates the roof and it ruins the siding. You have that. We've had hurricanes, we've had wind, we've had water, we've had fire. Now, fire you're going to have everywhere, but mold's another one. So all of these things start to really jack your insurance costs. We've had all of this stuff over the years, and I'm sure there'll be more. You're not going to get away from the slip and falls, and well, maybe you are, because we've had slip and falls in areas that have snow and ice. We don't really have those in Arizona too much, but they do happen. But the point is what you as a landlord and what you as an investor needs to do is take a look at where should you be. Where are property taxes reasonable? Where are insurance costs reasonable? Where are utility costs reasonable? Because all things being equal, those are fixed costs somewhat. You're not going to really get away with those. And that's precisely why we decided not to buy in Florida. At the time we were looking in Florida, the insurance costs were about $2,000 per unit per year. Now, just to put that into perspective, Arizona would be $500 or $600 per unit per year. So that's the difference. And so what the insurance companies do is that they actually bake that in. They're saying, okay, you're going to be in Florida, you're going to pay for it. You're going to pay for insurance against a claim. And so it's coming somewhere, right? And all things being equal, if rents are $2,000 in let's say Orlando, and they're $2,000 in Phoenix, and you start to look at your costs, it starts to make more sense on where perhaps you should want to invest. And so as you start to look at where you want to live, as you start to look at where you want to invest, these operating costs are really become an issue.
Yeah. And also you have to look at, insurance, what they're covering, right? Because even though, your price may be staying the same, they're removing things from your policy. I know my carrier just removed the umbrella policy altogether. So now I have to shop for a new carrier. So there's a lot of changes going on with insurance, but it's really affecting people, especially homeowners, because you have this unexpected cost that continues to rise. Another one is utilities and energy costs. Everything's just more expensive. So your water's more expensive, your electricity is more expensive. Everyone's mad about this and blaming data centers, and that is part of it because there's supply and demand, only so much energy output. So if they're taking a lot of it, energy prices can go up and they can make more money. So, that's a big one too for homeowners.
Well, the utilities is a whole animal, right?
Mm-hmm.
And I there are things that you can do, like what we did is there's actually a consultant that came in and takes a look at your electrical bills, for example, and they start to take a look at things that you could personally do to maybe cut that significantly. And by the way, it was like $100. Obviously they come in and they have all these things that they want to do, like insulate the attic and all that kind of stuff. So be ready for that. But the actual report itself is really eye-opening. There's also ways to save on water and sewer and trash and all that kind of stuff. There are ways, trust me, because we've dug into all this kind of stuff. But now what's happening is finally people are really starting to dig into operational costs. And that's actually what happens when there's no rent growth. That's what happens when wage growth stays stagnant and your expenses go up and you start to feel the wrath of inflation. So, people start to dig deep. They start to look at, what can I get away with and still, kind of maintain my lifestyle, or what can I get away with and not affect the rent in any way. And so that's what's happening now. It's kind of an unwinding as these costs go up, and they're going to continue to go up. This is what will continue to happen is you have to dig in. There are lots and lots of ways to save in these areas.
So this hits homeowners a lot harder than renters. So I always hear small landlords say, well, if my HOA goes up, I'm just going to charge more rent. Or if my insurance goes up, I'm going to just charge more rent. I'm just going to pass it on. But that's not how it works. So market rent and your expenses are two totally different streets, and they don't coincide.
It has nothing to do with anything.
Yeah.
Like literally.
Yeah.
Like, if we have a property tax bill, and by the way, we've had this where we have to pay an extra $100,000 a year on property tax on a big project. What am I going to do? Divide that up between my residents who are already on leases? The answer is no. You cannot push this stuff down. The tenants will move. Mm-hmm. They're going to move to the one across the street where the rents are the same. So to your point, the landlords are going to be whacked. They already are actually on the expense side. The homeowner, however, they don't. They're kind of in the same position.
Yeah, they definitely are. And so when we look at what this means, so one of the biggest things that I'm seeing is cutting back, right? And budgeting. But you have to be careful on what you're cutting back on and what you're budgeting on. So I know at my one condo, I was starting to get cockroaches, and I'm like, called the HOA and I said, hey, when's our next spray? Because I have cockroaches. Oh, we're not doing monthly sprays anymore. We're just kind of doing as needed. And I'm like,
yeah.
And so on a 300 unit condo complex, an as needed spray per unit here and there is not going to resolve the problem. So I then had to hire a pest control company to come spray my unit every 90 days just to keep the cockroaches out of my unit. Because as you can imagine, in a condo complex, you're going to have cockroaches. So you have to see where you're pulling back. And, our friends, Kathy and Rich Fettke, there was the fires in California, and a bunch of their neighbors had their houses burned down, and they had cut their coverage to not be at replacement cost to save money. And then now they owe, $1 million to rebuild their house because they're short on their policy.
Yep.
So these are places, you're looking as a homeowner at places to cut back, but you have to look at what you should be cutting back on.
Yeah. And I will tell you, insurance is probably not one of them.
Mm-hmm.
Right. I mean, I hate to say that. And I've been through this, guys, trust me. But I also know when you need insurance, you got to have the right coverage. And, so that's a high deductible. That's totally fine because now you're kind of, call it self-funding the first piece, but you really do need something bigger, and so that's one of the strategies, of course, is a higher deductible can lower your premium. But for anything big, let's say on our projects, we have $100,000 deductible. When I started in this business, it was $5,000. If you can imagine, it's $100 now for us, but we obviously don't want to ever come back off the coverage because we do have fires, and we do have things that require. We had a huge hurricane in Houston, Hurricane Ike. This is going way back, but it wiped out 150 of our units. And then we had to tap into it. Now, We did have to fight with Lloyd's of London and went all the way to the Texas Supreme Court. That's a whole nother story. But the reality is we had the coverage and we ended up replacing the property.
So I think for buyers, what they have to do, and I'm recommending my buyers do this as well, is look beyond the mortgage at your costs, right? Like if you're pushing yourself very, very tight on your payment, you have to understand that you're going to have insurance and property taxes and possibly an HOA. And then when you go to replace something, it's going to be expensive. So you need to be budgeting for that. So I think that that's really important because previously, when your insurance was kind of cheap and your property taxes were kind of cheap, you didn't have to do that and you didn't have to account for increases. But now you do. And then I think for investors, it's the same thing, except now you're looking at your cash flow, right? If your cash flow is tight, if your cash flow is $100, $200 a month, you have to know a slight increase in anything or a slight decrease in rent is going to push you under really, really quickly.
Well, this is part of due diligence, So the one thing, just jumping back to HOAs real quick, if you're buying something in an HOA, that is a little bit out of your control, right? Mm-hmm. You really need to understand that before you invest. Like that 1-bedroom condo we said, like there's no way you can make something like that cash flow for sure. You got a 1-bedroom, you already paid $350 for it, and that your costs are well over $1,000 a month, not including property tax and insurance, right? Somewhere in there, and so you have that. So you need to look at your costs. The cool part about investing is you can actually pull up the property address and to dig into this. You can actually get an insurance quote on a property before you buy it. You can actually go look at your utility costs. You can get pretty close. You can pull up your property taxes. Now, what you do have to budget for is if you buy something for more than it's assessed, they're going to pick that up and your property taxes are going to be higher. Obviously, there's a lag of maybe about a year for that. But the reality is you can kind of budget for all this stuff if you're buying something new or existing, let's say. But with a homeowner, it kind of creeps up on you. It's like death of 1,000 cuts.
Yeah, and I always tell people, too, in that due diligence period, that 10-day period you have after you make the offer, especially if you know it's going to be tight, you need to be running all these numbers right away. Finding out the property tax, finding out the insurance costs, all of that stuff.
And on commercial, like multifamily, we'll take 30 to 60 days due diligence because it's super important that you really understand what your costs are. So we walk every single unit. I want to know how many carpets I'm going to need in year 1 and year 2. I want to know if I need new appliances. I want to know if I need to paint a unit, all that kind of stuff. So that's a whole nother piece. But you're stepping into the shoes of the seller, and you need to know that stuff.